So are you a complete beginner who just knew about Forex trading of recent and you're totally confused on how to get started with Forex trading? Or maybe you're someone who already have little knowledge about Forex and want to take more about Forex and how to predict the Forex market chart? Right in this video, I'm going to be walking through almost all you need to know about getting started with Forex trading by the end of this video. So by the end of this video, you must have gained knowledge about the basis of Forex, which will also be a very huge stepping stone for you to begin your Forex trading career. So with that much being said, let's first of all talk about what's the meaning of Forex. So Forex is simply the exchange of two currencies in order to make profits. So for example, let's say the Euro USD pair. So at this point, the Euro is the base pair and the US dollars is the quote pair. So at this point, it's the euros you're exchanging for the dollars. So if you predict that the euro will get higher than the dollars and it work according to your prediction, you are making profit for that. But if you go against your prediction, you are losing a specific amount of money which you risk on that particular trade. So if you predict that the euro will get weaker than the dollars and it goes according to your prediction, that means you are making profits out of that trade. But if it should go against you, that means you are losing that specific amount which you risk on that particular trade. So that's simply what Forex trading simply means. So in Forex trading, there are two main apps which almost all traders make use of, which 99% of traders make use of in the Forex market, which are Tradingview and the MetaTrader 4 or 5 platform. So these platforms are mostly used by all traders in the Forex market industry. So Tradingview is a platform which you're using to analyze the Forex market chart in order to predict price movements, to know if you are to buy or sell. While the MetaTrader 4 or 5 is a platform which you're going to be using to execute trades after making prediction of price using the Tradingview platform. So in this video, I'm going to show you how to make use of the Tradingview platform and also the MetaTrader app, and also tips on how to analyze the Forex market chart. So with that much being said, let's get the video started. So guys, the first thing you need to do is to head over to Google, search tradingview.com. So Tradingview, as I said, is the platform where you do your analysis to predict price movement in the Forex market. So just head over to Google, search tradingview.com. So right here it's pop up on my screen. Just click on enter. So when you head over to Tradingview, if you don't have an account, you just click on get started. But if you have an account, you just click on sign up right here. So for those that don't have an account, let me show you what you have to do. So when you click on get started, right here you can see Tradingview is completely free to use, it's completely free to use. But for when you have gone far in your career, there are other plans, other trading plans. When you have gone very far in your career, when you have seen success in your career, then you can switch to any of these plans so that you can trade on multiple screens and other futures which will be available. And also you can use 5 indicators. See the futures you can see right here, 5 indicators per chart. So all these are the futures once you purchase a plan right on Tradingview. So when you have gone far, this is when you have gone far in your career, but you can completely analyze the chart as a complete beginner for free on Tradingview without any charges. But to switch to switch to plan to access more features, you have to pay. But it's completely free to use. So with that being said, let's head over to click on sign up right here. So if you just what you have to do is to put in your email and just put in your password. You click on create account. Your account will be created in a minute. So if you have an account, just click on sign in, and you'll be signed into your Tradingview account. So for me, I have an account. I'll just click on sign in. You choose if it's email or Facebook or anything what you use on sign in. Click on sign in. So right here, let me just sign in to show you. So right here, this is Tradingview. Now I'm already signed in. Let me click. So right here, this is Tradingview, and these are the pairs. This is Tradingview platform. These are the pairs on your watch list. So just click on any of these pair. And when you click on any of these pair, you click on see on super chart. So right here now we are right in Tradingview, and this is we're right in Tradingview. This is Solano pair. So if you're not trading these pairs which are here, you can simply delete them using this cancel icon which is here. Just click on this cancel icon to delete. So right here it's all deleted. Then if you want to add any pair to your watch list, all you have to do is just click on this plus icon which you see right here. So when you click on this plus icon for Tradingview, if you are trading stocks, funds, futures, forex, crypto, indices,
bond, economy. You can trade all these pairs are available on TradingView. You can analyze these currencies or pairs charts right on TradingView. But this is a Forex beginner course guide. I'm going to be showing heading over to Forex, showing you Forex pairs. So just click on Forex right here, and you'll be seeing all kinds of Forex pairs: Euro USD, GBP USD, USD JPY, GBP USD, and many other pairs. But for this video, I'll be showing you Euro USD. Euro is like the base pair, while US dollars is the quote pair. So Euro is the main pair which you're expected to either get higher in price or get lower in price, which is the base pair. So you just click on this plus icon to add Euro USD. Right here, Euro USD is being added to our watch list. So you click on Euro USD to view the chart. Right here, this is Euro USD on your watch list. So the next thing I want to be showing you right in this TradingView platform, I'm going to be showing you the most important tools which you need as a Forex beginner right on TradingView to help you analyze the Forex market charts right with TradingView to predict price movements right in TradingView. So what you have to do right now is to head over to tools, which you're seeing right here. Click on trend line. And right here, this is trend line. So what you have to do is to click on this star to favorite it. Now trend line is being added to our watch list. So trend line is being added to our tools, which you can see right here. So trend line is being added to our tools, which you can see right here. So the next thing you need to do right now is to add up the rectangle. So right here, this is the rectangle. You just click on this star icon to favorite it. It's appeared right here. Then the next thing you need to do again is to add up your the tools to measure your long position or your short position. These two tools to measure if you are buying, that means this is the long position. If you are selling, that is the short position, to measure the profits or your risk to reward per that trade which you are taking. So just add favorite their tool to add it to the watch list. So before I show you how to use these tools, we're going to be talking about candlesticks. What are candlesticks in the Forex market chart? So candlesticks are all these things you are seeing right on the charts are called candlesticks. These green boxes and these red boxes are all called candlesticks in the Forex market chart or on any pair or any financial markets. These are all called candlesticks pattern. So for the green candlesticks, this simply signifies that the market is uptrending. The market is heading to the upside, which you can see right here. The market is heading to the upside. So for this candle, for the green candle, it opens at the low, which you can see right here. It opens at the low and closes at the high. So for each of these green candles, which you are seeing right here, you can see multiple green candles which are right here. You can see each of them opens at the low, closes at the high, opens at the low again, closes at the high, just like that. The market kept on heading to the upside, which you can see. So the green candle is called the bullish candle. So another name for the green candle is called the bullish candle in the Forex market. So the second, the red candle which opens at the high, which you are seeing right here. Each of these red candles opens at the high. You can see this one opens at the high, closes at the low, opens again at this high, closes at this low, opens again at this high, closes at this low. Then the green candle take over, and it comes again, forms another, opens at the high again, closes at the low. The red candle opens at the high again, closes at the low, just like that. These are what make up the Forex market chart, these candlesticks. So another name for the red candles, the red candle is called the bearish candle, which signifies that the market is downtrending. The market is heading to the downside. Each time you see this red candle in the Forex market, it signifies that the market is downtrending right in the Forex market. If it's for the green, the market is uptrend. The market is heading to the upside. That means this signifies that you should buy, depending on your prediction of the market price. You should buy when you see the green candle. Then for the red candle, you should sell depending on your prediction, on your analysis, which you have already done. You should sell at that time, which is the red candle is also called the bearish candle right in the Forex market. So let's talk on how to use these tools right in the Forex market. So to use these tools which are same, which we just added right on TradingView, these tools are used to identify support and resistance in the Forex market, which are formed by this candlesticks pattern, which you are seeing right here. So we use these tools which you are seeing right here to identify trend line formation which is trend line formation, which the support and resistance have. So the support and resistance are responsible to form trend line in the forex market. So I'm going to be showing you what is support and resistance right in this chart. So support and resistance, this is the support and resistance. So right here, support is the area. So right here at this point, this is called the support area. So anywhere where the green candle bounce price back to the upside. When price gets to a certain point and refuse to cross that certain point, then bounce back to the upside. That is called a support area, which you are seeing right here. So the green candle are the ones which form the support area, which you are seeing. The green candle, look at it. First of all, we got to this point. Price got to this point, formed a support, which is the green candle, which is the green candle which formed the support, as I said earlier. So the green candle formed the support and started uptrending, when heading up to the upside, which you are seeing right here. And the green candle was heading to the upside, started forming also the red candles, which are also responsible for the resistance area. Now you can see that the market got to this point. Now you can see that the market was trending, now started forming a trend line. So like I said, support and resistance are what make up a trend line in the forex market. So right here, support and resistance are what make up trend line in the forex market. So let me break it down for you. So right here is the area of support, and at the top right here where price rejects is called the resistance area. So right here is the resistance area, which you're seeing right here. At the top, where price, the red candle rejects price to the downside, is called the resistance area. So you can see the support and the resistance are what make up a trend. So right here now we already had a trend, which already the market formed a trend using this support and resistance, which you see right here. So this trend line tool is used for marking supports or trend line formation area in the forex market. So this trend line tool, which you just added right on the tools, are used to mark supports and resistance in the forex market. So also let me show you how to use the rectangle tool. The rectangle tool is also used to identify support area, which you are seeing right here. It's also used to identify support area. So this is how to use these rectangle tools to identify the support area where price bounce back, which you are seeing right here. So I'm going to be showing you how to use this long. Now we're going to be talking about the long form and the short form um, position calculator, which you are seeing right here. To calculate your risk to reward per trade. So for the long form position, let's say at this market, this chart is now you're expecting price to head over to the upside. All you just have to do is this is your risk to reward ratio. So right now, this red background which you're seeing right here, this red spot is used for calculating your stop loss. You can see this is for stop loss, which you're seeing right here. Right here, this red background is for calculating your stop loss, and the green background is for calculating your take profit area. Let's say you just took this trade now. You took this trade right at this spot, and you're expecting your take profit should be at this level. So this will help you know the amount you are risking per trade. This long position tool will help you know the amount you are risking per trade, so that you will know the amount you are risking on a specific trade. Like you can see now, this is a very nice good to reward risk to reward ratio, which you can see right here. You are risking like let's say you're risking like, look at this trade, at this long position tool now. Let's say you're risking like 1% to cash out 3 to 4% on this trade, which you're seeing right here. So this is a very nice risk to reward ratio. So this will help you know the amount you're risking per trade. So let's move over to the short position tool. Now let's say maybe you're expecting price now to do the opposite of what I just said. You're expecting price now to reverse back down. Now price is heading over to the upside, and you want price to reverse back to the downside. It's still the same thing. Here is for calculating your stop loss. The red background, it's just a switch. This will help you know the amount you're risking per trade, which is the red background is for measuring the stop loss, and the green background is also for measuring the take profit. Just the same as the long position, just kind of a switch in the market. So the next thing we're going to be talking about right on TradingView is we're going to be talking about time frames. What are time frames in the forex market? What are time frames in the forex market chart? So time frames. If you head over right here, you just head over to Tradingview. On the top right here, you see time frames. Just click on this spot. Now you can see that on time frame you have the 1 second time frame, 5 second time frame, 10-second time frame, 5 second time frame, and so on. 1 minute, 2 minute, 3 minute time frame, up to 15 minutes, 60 minutes, 1 hour, and so on and so forth. So there are different time frames in the forex market. So for this time frame which I'm using is a 30 minutes time frame, which you're seeing right here. So I'm using 30 minutes time frame right on this chart. So what the time frame I do make use of is 15 minutes and 30 minutes. So for time frames, for any specific time frame which you choose in the forex market, that is the time it takes to form each of these candlesticks which you are seeing right here. The candlesticks are formed based on the time frame which you are using. So let's say now I'm using 30 minutes time frame. So each of these candlesticks which you are seeing right here takes 30 minutes to form each of these candlesticks. So 30 minutes to form each of these candlesticks, each 30 minutes each to form each of these candlesticks. So if I head over to 15 minutes time frame right here, you can see each of these candlesticks take 15 minutes to form each of these candlesticks, which you are seeing right on this chart. So each of these candlesticks takes 15 minutes to form each of these candlesticks, which you are seeing right here. So the time frame is simply depends on the time it takes to form each candlesticks. So any time frame you are choosing, it will determine the time it takes to form each of the candlesticks in the forex market chart or on any pair you are trading. So time frame is simply the time it takes for candlesticks to close in the market, for candlesticks to form and close in the market. So the next thing we're going to be talking about is alerts. How to set alerts in the forex market. What is the use of alerts in the forex market? Let's say right now you are expecting like as you see this trade right here, you're expecting price to maybe get to a certain point and you sell. Let's say, let me clear off this stuff. So let's say right now, as this is the trade, you're expecting price to maybe head to this spot. You're expecting price to reverse at this point, and you don't want to keep on looking at the chart. You just want to set your alert so that the price should get to this point, you'll be alerted either through your email or SMS. The alert will come through your SMS or email. So all you have to do is to mark the area of where this trend of where price is. As you can see, this is Euro USD. Price is currently at 1.08685, which you're seeing right here. So all you have to do is to head over to your alert to click on alert right here. So once you click on alert, you just simply change the specific price which is there and put the specific price which you want price to get to and be notified. So right here I just put 1.08685, which is currently here. So just click on create. The alert will be created. Now you can see that the alert is already created, which you are seeing right here. This dot which you are seeing right here is the alert. So once price get to this point, you'll be alerted that price has reached the specific amount which you expect price to reach. Then you'll be expected to know if you have to take a buy or if you have to take a buy or a sell, depending on your prediction of price movement at that time. So alert will help you not to always look at the chart always. So that's what we traders use alert for. So in case you don't want to keep on looking at the chart, maybe you're just expecting price to get to a certain point, and we just need the alert to notify us when once price get to a certain point. That's what the alert is mainly used for. So the next we're going to be talking about is indicators. So right here, these are indicators. If you want to get any indicator of your choice, but for me, I don't mainly use indicators. But if I'm to use indicator, which I was using before, like the one I was using before, like awesome oscillator. Just search it right here. Awesome oscillator is right here. You can add up any you can see right on the chart. This is awesome oscillator indicator. Just showing you the volume of price movement. This is awesome oscillator indicator. So right here, if you want to add any indicator of your choice, just add up any indicator of your choice, search any indicator of your choice, and it will pop up here, and you add it up to your screen. So that's how you do it. For some of you who are trading a pair and you don't know the time that there is more opportunity in the pair you are trading, or you are trading a pair, you don't know the time that there's more opportunity and that the market creates more opportunity for that pair. So I want to be showing you a tool which will help you know the time there is more volatility on any pair you are trading right in the forex market, to let you know when there is more opportunity in the pair you are trading, so that once that time reach, you will just be conscious on your Tradingview app to be able to spot out a good trade to take at that specific time. So the website I'm going to be showing you right now is called babypips.com. So what you have to do is to head over to your Google or your mobile app store, or you can search it right on Google on your PC or your mobile phone. So just head over to babypips.com. When you search, so right here, this is Baby Pips. All you have to do on Baby Pips all you have to do is just head over to tools. Once you head over to tools, now you shift your mouse and head over to Forex Market Hour. Just click on Forex Market Hour right here. So right now you can see this is the Forex Market Time Zone converter to tell you when there is more opportunity on any pair, on any currency pair you are trading. So this is for each pair you are trading, it depends on the section which you are seeing right here. We have Sydney section, Tokyo section, London section, and the New York section. So right here now for the Sydney section, these are pairs that has like the New Zealand dollars, Australian dollars. For any pair which has the New Zealand dollars and the Australian dollars, you should be looking up to the Sydney section and look at always know the time that there is more opportunity in the market on that pair which you are seeing. The time which is here is the time that there is more opportunity in the market on that pair you are trading. The time which is here. So for those trading the New Zealand and the Australian dollars, be conscious of this time to know the time, to know when there is more opportunity in the pair you are trading. The time depends on the time zone, on the country you are, the time zone which you are making use of. So now for the Tokyo section, we have the JPY, Japanese yen. For any pair that has the Japanese yen, you should always look at the Tokyo section to know the time which is here, so that you know the time that there's more opportunity on the Japanese yen which you are trading. So to know the time that there's more opportunity on the Japanese yen which you are trading. So the next one we're going to be talking about is the London section. But for the London section, these are pairs that has the euros and British pounds and the CHF currency. Any currency that you are trading that has these pairs, you should always look at the London section. Now for the New York section, if you are trading any pair that has the US dollars and the Canadian dollars, you should look at the New York section. Any pair that has the US dollars and the Canadian dollars, so you should always look at the New York section to know when there is volatility, when there is more opportunity in the market. When the market is volatile, when there is kind of more opportunity to fish out in the market, you should always look at the New York section for if you are trading the US dollars and the Canadian dollars, the New York section. So make sure you check this Baby Pips art to help you know the time that there is more opportunity in the pair you are trading right on Tradingview, so that you can be notified and analyze the market at that time that there's more volatility in the market, so you can be able to fish out more opportunities and make profits easily at that time that there's more volatility in the market.
So guys, take a look at this chart. You can see that the market was just downtrending at this point. We're having a downtrend. This simply means that sellers are in control of the market at this point. The market was just heading downwards. Then the market got to a point that the market formed a green candlestick heading to the upside, and before you know it, the market got to this point, formed a support, which you are seeing. Market formed a support right there, and before you know, the market started uptrending, heading more to the upside. Now the market started uptrending, changed direction from downtrending to uptrending, which is the market changed direction right from heading downwards, right from downtrending. The market got to this point, to this support area, to this very support area which you're seeing right here. Then the market changed direction, failed to break out of this support area. The market started uptrending again, which you are seeing right here, all the way from downtrend to the uptrend. So when the market is uptrending, it simply means that buyers are in control of the market at that point in time, which simply means the market is uptrending. So I want to be explaining the three types of trend formation we have right in the forex market. So as you can see, these are the three types of trend formation we have in the forex market. Which you can see, first of all, we have the uptrend and the downtrend, which I just showed you an example right in this video. So we have an uptrend, so which simply means that there is that buyers are in control of the market at that point. The market is uptrending. So when the market is uptrending, you can see that the market forming an uptrend, came back, touched this point, came back, touches this point, head to the upside again, came back again, touches the second key point, which you're seeing right here. Now face to break again, head up to the upside. The market will just, when it goes up, it came again to breathe and head up to the upside again. So this is how to know that the market is uptrending, how to trade an uptrend market. You know that the market is uptrending. So maybe when the market can maybe stop uptrending, when the market might have a breakout like this, the market might stop uptrending at this point. When we see this kind of a trend formation, the market is uptrending at that point. So now for this downtrend, we see the market starts forming this kind of a trend. The market is downtrending, which you can see right here. Market is also doing the same thing, just as the uptrend, which you can see. Touches this key point, fails to break again. The downtrend simply means that sellers are in control of the market at that point in time. So see, the market is downtrending just as the uptrend came back, touches this point again. This particular point of this trend, the upper trend, and fails to break and retrace again, form another trend and fails to break this other trend again.
Until you see a breakout, that means the market might start uptrending.
And if the market should break out, maybe have a long breakout which changes the direction, you should know that the market wants to switch direction, maybe start uptrending. Just as the uptrend, the market should switch direction. This simply means that the market might change direction and start downtrending. For the downtrend, the market should change, have a breakout. The market might change direction and start uptrending and heading to the upside. So let's talk more about the uptrend and the downtrend. So you can see that the uptrend at this point, the uptrend when it touches these key levels, it forms a higher high. It forms, look at the higher high, higher low, higher high, higher low, higher high, higher low. Just like that, market is that simply means that the market is uptrending. When you see these higher highs and higher lows, the market is uptrending. So when the market is downtrending, you see first of all see a low, then you see a high, came back again and see a low, and then you see a high, see a low, you see a high. So this simply means that the market is downtrending. Whenever you see lower high, lows and highs, this simply means that the market is downtrending. So let me write it down for you. So this is the highs. Market first formed a low. So this is the low which you are seeing right here. The market is downtrending, it first formed a low. And when the market is uptrending, it comes up first, forms a high, which you can see right there, and it touches again, forms a low. So this is an uptrend market, and this is a downtrend market. It goes up, then come back again, touches this high, and goes up again. This is the second high which you are seeing right here. Came back again, touches these other highs, and go up again. Market continues doing that. See, maybe it has a breakout, then market might change direction and head to the downside. So for downtrend, the same first the lows, go to the highs, came back again to the lows, go to the highs, came back again to the lows, go to the highs, touches these highs and still keep on downtrending. See, maybe there is a clear breakout that might change the direction of the market. So let's talk about the consolidating trend. So when the consolidating trend, you have equal highs and lows, which you are seeing right here. Equal highs and lows. These are the highs. So right here, these are the highs and these are the lows. So you can see that all of them are equal. So we'll take our trend line tool to mark it. You could see that right here. You can see all these trends. So you can see we mark it. You can see they are all equal. And if you mark the upside, you can see it is all equal. So you can see having equal highs and lows. Let me write this down. Having equal highs and lows. So that is the consolidating trend chart. So on the consolidating trend, you can trade inside the consolidating trend, or you can either wait for a breakout, either for the downside or the upside. So there are two ways you can trade a consolidating chart. It's either you trade inside the consolidating trend chart, or you trade a breakout of that consolidating trend chart. So these are the two ways you can trade a consolidating trend chart. Either you trade inside, or you wait for a breakout to take a buy or a sell. So this is how to trade a consolidating trend chart. So guys, the next thing we're going to be talking about is types of analysis and how to predict price movement using this analysis right in the forex market. So in the forex market, we have two types of analysis. First, the technical analysis and the fundamental analysis. So technical analysis is basically what I've been showing you right on the chart. Is out of using the chart to predict price movement in the forex market, analyzing the chart to predict price movement in the forex market, like what I've by identifying support zone and resistance zone in the forex market, which forms a trend, which you are able to analyze the trend, identify a trend breakout, which will enable you to take either a buy or a sell on a particular trade. So with that being said, let me just you already have a clear view of what technical analysis is out of analyzing the forex market chart in TradingView. That's simply what technical analysis means. So with that being said, let me move on to fundamental analysis. What is fundamental analysis? Fundamental analysis is the art of analyzing the forex market by using the economic news data to predict price movements in the forex market. By using the economic data to predict price movement in the forex market. So to do that, there are tools which you can use to do that. There are websites which you can use to do that. Which the one I do use is myfxbook. I do use myfxbook. So I'll be showing you right in this video myfxbook. So first, just head over to myfxbook. So right, this is my FXbook, guys. So what you simply need to do is if you have an account, you sign in. If you don't have an account, you just simply click on sign up. Simply click on sign up to get your account. So if you don't have an account, you just click on username. This is your username. You fill in your username and email, password, then re-enter your password. Then you just click on I'm not a robot agreement. Just simply to sign up. But for me, I have an account. I'll just simply sign in to show you right how to use my Facebook for fundamental analysis or reading the economic data on any pair you're trading on. So right here, guys, this is my Facebook. So to view the economic calendar of any pair you're trading to perform your fundamental analysis, so just head over to economic calendar right on my Facebook. Just click on it. So when you click on economic calendar, then you find the dates, the pairs which are trading, the date, the pair you are trading, and the topic of the news which will be released on that particular pair. And you find if the news is of low impact or medium impact or high impact. So I'll be explaining that this impact news right in this video, types of news and their impact, this low and high, medium and impact news. I'll be explaining it right in this video. So first, like I said, you find the time the news will be released on any pair you're trading on, and these are the pairs. You can see the pairs, Euro, GBP, and many other pairs. Any pair you're trading on, it is right here on economic calendar on my Facebook. So you just search your pair and check the available news data for that particular pair. So I'll be explaining what are low impact news. So in the economic data on any pair you're trading on, there is news, and on any news, that news has impact right in the forex market. That news has impact in the forex market. That news can push price very fast in the forex market. So we have types of news: low impact news, as I said, medium impact news, and high impact news. So low impact news, they have a very low impact in the market. They don't have much impact in the market. You don't need to really bother yourself about such a news in the market. They have a very low impact. So the second type of news, which you have the medium news, this kind of news when they occur, you should kind of be conscious of this kind of news because they can drive price movements to move fast also. They can make the market to be volatile, and there will be fast movements of price in any pair you're trading on. So when kind of news occur on any pair you're trading on, there will be kind of fast movements of price on that particular pair you're trading at that particular time, and at that particular time the news is being released. So there will be fast movements of price when this kind of news is being released on the pair you're trading on. So high impact, this is the one you should be very conscious of. You should not joke with this one. This one, when this kind of news occur, the market seems to be very volatile. There will be very fast movements of price in the forex market. Very fast movement of price on that particular pair the news is being released on. As you can see, this news is on euro. So let's say you are trading a pair that has the Japanese yen, and this kind of the news is being released. The Japanese yen pair price will move very fast, either depending on the direction of the news. If it is to head to the upside, it will move very fast, and if it is to head to the downside, it will move very fast. So if you're trading any pair, any kind of pair, you should be very conscious of this high impact news, because they can move price very fast, and you can lose a lot of money in this kind of a news when it's being released. High impact news, you can lose a lot of money, and you can make a lot of money if the news should go. If the price should head to your direction, you can make a lot of money in such a news. So my advice to you as a beginner forex trader, you should be conscious of when this kind of news is being released. My advice is to not trade this kind of a news until you have gained a good skill in forex trading, until your skill level is high in forex trading. So I would advise you to not trade when this kind of a news is being released. Instead, wait after the news, then you can continue your trading to avoid you losing a lot of money at that particular time. So that's my advice to you as a beginner forex trader. So you gain the skill of forex trading. So I advise you not to trade on the high impact news, so you won't lose a lot of money. So my advice to you is also use stop loss on any trade you place. Always use your stop loss in case of such a news is being released, so it won't just blow up your account. So always make use of your stop loss so that you won't lose all your money. Maybe if you don't know, the news just came up and you don't know, you not check myfxbook to know when there is news. So always make use of your stop loss so that instead of such a news being released, it won't just blow up your account. Instead, the amount you risk will only be take off. So this is it about the fundamental analysis. So like I said, check out myfxbook and start performing your fundamental analysis on any pair you're trading on. The link will be in the description below. So that's it. So guys, what I'm talking next is pips. What is pips in forex trading? I know some of you might have heard about pips. You don't understand what is pips. So pips is basically the amount you are making on a trade. So pips is the amount of money you are making on a trade. I'm going to show you how to calculate pips using the long position tool and the short position tool right in this video. So let's head over to, first of all, the long position tool. So right here. So let's say this is right here is our stop loss. So on this particular trade now, this is stop loss, this is take profit, as I said before. So right here, to calculate your pips, you can see that right here, this is, you check on the amount which you're saying you have a 45.2 amount, which is the pips you are making. So to calculate your pips, you have to divide that number by 10. So which is, you have to divide that 45 by 10. So when you divide it by 10, it will give you, I think, 4.5. That means you're making 4.5 on this trade. And your risk is around, so if you divide 13.5 by 10, that means you're risking 1.35 of your approximately 1.4 of your capital, 1.4% of your capital right on this trade, and you have to make 4.5% on this trade. So that's a very good risk to reward on a trade. There's a very good risk to reward. So now let me show you the short position. How to also, short position is also the same thing, but let me give you a clear view of how to also do it. So also the short position is just the same thing. As you can see, the short position right here is around 45.4 amount, which is 45 pips, and if you divide it by 10, that will give us 4.5% in profits you have to make, and the risk is around also 13.5, which is the same thing. Approximately 1.4%, you are risking 1.4. Approximately 1.4% you are risking of your capital, and you have to make 4.5%. That trade should work. So that's what pips are. If you divide this number, which is right here, by 10, so that's the amount you're making on that trade, and your loss also divided by 10, that's the amount you're risking on that particular trade. So for pairs like Euro USD, to calculate your pips like Euro USD, you can see that Euro USD, if price should, like, let's say price is around 1.08 thousand, and you are expecting to take your, and you took a long position. Let's say price is around right here on your long position too. Price is around 1.08, and right here Euro USD, to calculate your pips. So this is for Euro USD, 1 pips on Euro USD is when the price counts up to 100. So the price should enter 1.0800. That means this is 1 pips right here. Right here, this is 1 pips, which you can see right on the chart right here. As you see, let's say this price, you bought it at 1.08 thousand, and for every 1 pips, it counts 100 to 450. That is 4.5% in profit. It is 45 pips in profit. When you divide it by 10, that will give you 4.5% in profit, while you are risking just approximately 1.4%. 13.5 divided by 10, that's approximately 1.4%. So this is how to calculate your pips using the long position 2 and the short position 2 right on Tradingview. So I'm going to show you how to make use of the MetaTrader app. So let me show you how to make use of the MetaTrader. So guys, I'll be showing you how to make use of the MetaTrader platform. So if you don't have MetaTrader installed on your phone, all you have to do is to head over to Play Store or Apple Store right on your mobile phone. So let me show you what to do when you head over to Play Store. So just search MetaTrader, click on search. So right here you'll find MetaTrader 5 and MetaTrader 4. So as you can see, I have both of them installed right on my phone. So you can go ahead and install it right on your phone. So let me go back and show you how to make use of the MetaTrader 5 and MetaTrader 4 platform. So just head over to MetaTrader 5 or MetaTrader 4. It's the same thing. You see the same way of using both of them. So I'll be showing you using the MetaTrader 5 platform. So once you download the MetaTrader 5 or MetaTrader 4, this is how it will look like. So like I said, to trade on MT4 or MT5 platform, you need a broker account. You need a Forex broker account. You can also open a demo account using the MetaTrader platform. All you have to do is just click on Get Started right here. So once you click on Get Started, just click on this plus icon right here. Then you'll find the broker to sign in your account. So you can also search, if you don't find your broker, you can also search your broker using the find the broker by searching your broker right here. So I'll show you how to open a demo account using the MetaTrader platform. So just simply, this is MetaCode right here, you can see right here. Click on MetaCode software. Just click on open a demo account. So once you click on open a demo account, or you can log into an existing demo account. So you click on open a demo account right here. So all you have to do is to just fill in your first name, your second name, your mobile number, and also your email. Then you can just, your leverage, which is right here, you can just choose a leverage of your choice. Then deposit amount, any amount of your choice. Click on accept right here. So after that, once you fill in this information, then just click on register and you'll be registered. For this video, let me just create this demo account to show you. So right after you have created the account, so just click on quote to view the pairs on your watch list. So right here you'll find the pairs which are on your watch list. If you want to delete any of these pairs, just click on this icon right here and click on this delete icon. Then you choose any pair you want to delete, just delete. It's all deleted. Then you can see it's deleted. So if you want to add up any pair also, you can click on this plus icon right here. So let's say you want to add a pair like GBP card. All you have to do is to search the pair you want to add, then tap to add. So right here you can see it's added to our watch list. And also, if you want to view the chart for any pair you are trading right on MetaTrader, all you have to do is to click on the pair which you want to view the chart on. Click, let's say Euro USD. Then you click on chart right here. So right now, this is the chart for Euro USD. And also, let's go back to quotes. And also, if it's GBP USD, you can simply click on GBP USD and click on chart right here. It's still the same way. Then another way is also if you go back to quote. Let's go back to quote and just click on chart right here. You view the charts, the existing chart of the pair which you are trading currently. So I'm going to be showing you how to place a trade using the MetaTrader platform. So let's say you want to place a trade on Euro USD. Just simply click on Euro USD and click on new order right here. So right here you'll find the leverage you want to use in placing the trade. So leverage is basically the amount you are risking on a particular trade, which also determines the amount you have to make on that particular trade. So let me show you how leverage works. So this is a standard account which I am making use of. So let me show you what example of how leverage works. So let's say you use is a leverage of 0.01. So for each pips you catch on Euro USD it's worth $1. So if you catch 4 pips, that means you're making $4 on that trade. So on any pair you're trading on, once you catch 1 pips on any pair you're trading on, it is $1. So if you catch like 4 pips on any pair you're trading on, that is $4 on that trade. So let's say now you switch over to 2. That means $2 on each pips you catch on a particular trade, on a particular pair you're trading on. That is $2 on each pips you catch. So if you switch over to 0.10, that is $10 on each pips which you catch on a particular trade, on any pair you're trading on. So that is $10 on each pips. So let's say you set your leverage at 0.50. That is on each pips which you make, that is $50 on 1 pips. If you should catch 4 pips, that is you're making $200 on that trade. So that's simply what leverage means. So let me also show you again. Let's say you use 1, that is you're making $100 on 1 pips on any pair you're trading on. If you catch 1 pips on that pair, that means you're making $100 on that particular trade. So the amount of money you have on your account also limits the amount of leverage you have to use on a particular trade. So the bigger your account size, that can increase the amount of leverage you can use on a particular trade. Leverage increase the profit you have to make on the market. By increasing your risk you are risking on that particular trade will also increase the amount you have to make on that particular trade. So the higher the leverage, the higher the reward, and also the higher the risk which you are risking on that particular pair, on that particular trade. So that's simply what leverage means. As it stands now, this is market execution. That means if you want to buy or sell instantly, you can simply click on buy, putting your leverage the leverage you want to use on that particular trade. You can simply click on buy or sell, and the order will be placed immediately. And also we have buy limit, sell limit, buy stop, sell stop, and also buy stop limit and sell stop limit. So I'll be explaining what is buy limit, sell limit, and buy stop and sell stop. So guys, we're first going to be talking about buy stop and sell stop before we talk about sell limit and buy limit. So buy stop is when you place an order above the current market price. Like you can see the price is currently at this point, you can see price is currently at this point. Price is currently at this point, so you place an order above the current market price, which is here. The expected price will get to this point, then you buy and you take a long position. If the expected price will get to this point, then you take a long position. That is simply what buy stop means, and you place a pending order, so the price will get to that point depending on your prediction of price at that time. So if you're waiting for price to get to this point, then you have a confirmation to take a buy. So that's simply what buy stop means. So sell stop is when you place an order below the current market price. So right now price is currently here, and you place an order at this point, so that the price should get to this point, it will automatically begin a sell position. So that's simply what sell stop means. When you place an order below the current market price, you see that price is rising, and you wait for price to get to this point. and you place a sell position, and the price maybe continue getting down. That's simply what sell stop means, depending on your prediction of price at that time. So as you can see, this is for buy stop, and this is sell stop. So now let's talk about buy limit and sell limit. So sell limit and buy limit are just like a switch. So sell limit is when you place an order above the current market price. So sell limit is when you place an order above the current market price. You see that price is currently at this point. You're waiting for price to get to this point, then you sell. That's simply what sell limit means. So when you place an order above the current market price, so you're waiting for price to get to this point, then you take a short position. That is sell limit. So buy limit is when you place an order below the current market price. You're waiting for price to, as price is rising, you're waiting for price to head down. Waiting for price to like held down, then you buy. Then you wait for price to head down, then you buy. That is buy limit. That is buy limit. This is simply what buy limit means: placing an order below the current market price. So it's like a switch: buy stop, sell stop, and sell limit and buy limit is just like a switch, which I've explained in this video. Is like a switch in both of them. So this kind of order you place it when you have like you're setting price to get to a certain point. Then you place this kind of order. So this kind of order is used for when you're setting price to head to a certain point. Then you're waiting for price to head to a certain point, which you have a clear confirmation that price is going to move to your direction. Then you place this kind of order to wait for price to get to that point. Then either you take a sell or you buy. It will place automatically. So that's simply what buy stop and sell limit and also buy limit means in the forex markets. So guys, then after you have placed an order, you can go back to view your order. So to view your order, you have to click on trade. Then you view your order which you placed, and you also view the current balance which is in your account. You view your current balance and you view your running trades will be right here. So like I said, to trade on MT4 or MT5, you need the Forex broker account in order to trade a live account. So this is a demo account which I showed you how to create it in this video. So I'll be showing you the broker which I make use of. So the link will be in the description below. So check it out. So guys, like I said, trading in MetaTrader 4 or 5, you need a Forex broker account. So as you can see right on the screen, this is the broker which I make use of, which is called XNext broker. This is a well-regulated broker. As you can see, you can try for free. You can create a demo account right in this broker, and you can also register a real account right in this broker, which you deposit real cash and trade real money. Once you make profits, you can withdraw within a minute, and once you deposit money into your account, it will appear within 10 seconds right in your account, and you can start trading your real money, trading the market. So right on XNext, you can leverage up to 1:3000. And once you are trading on XNext, you have very low spreads on XNext. So this is the broker which I do make use of in trading the forex market. So make sure you use the link in the description to sign up. So with that much being said, guys, this is the end of the video. So make sure you subscribe and turn on your notification bell to be notified each time I post a video. Peace out.